All right, so Bitcoin. We're doing a deep dive today, trying to figure out what this crazy jobs report means
Yeah.
for Bitcoin. What's going on? We've got two articles from Forbes.
Right.
One that says Bitcoin is bracing for like a potential earthquake as the Fed kind of figures out what to do with this news.
Right.
And then another article that kind of digs into Bitcoin's price volatility
Mm-hmm.
and, what we might expect in the future. So should be a good one.
Buckle up. It's going to be interesting. Um, I think what's so fascinating here is how a strong jobs report,
Yeah.
which, on the face of it, you would think is a good thing,
Right.
is actually causing, this ripple effect of uncertainty in the Bitcoin market. And it all comes down to the Fed,
Right.
the Federal Reserve, and how they are going to react to this kind of unexpected economic data.
Yeah, let's break it down. So the U.S. economy added 256,000 jobs in December.
Wow.
That's like way more. Analysts predicted like 155,000.
Huge.
Yeah. And unemployment ticked down too, so good news for the economy, right?
On the surface, absolutely.
Yeah.
But this throws a wrench in the Fed's plans because they've been trying to stimulate the economy by keeping interest rates low.
Mm-hmm.
And now, with such strong job growth, there's less pressure on them to cut rates further.
Right.
They might even keep them higher for longer than anticipated.
Yeah. And this is where Bitcoin comes in
Uh,
because right after this jobs report dropped, Bitcoin's price took a tumble.
oh, yeah.
It fell from around $103,000 to $92,000.
Oof.
That's a pretty dramatic drop.
It is.
What's the connection?
So think of it like this. When interest rates are expected to rise, bonds become more appealing to investors.
Mm-hmm.
Bonds are seen as like a safer investment, right? Offering a guaranteed return. So money starts flowing out of riskier assets like Bitcoin
Right.
and into those safer havens. We actually saw over $1 billion in Bitcoin liquidations this past week.
Wow.
So if you can imagine, someone borrows money to buy Bitcoin, hoping the price goes up.
Yeah.
And then it drops suddenly. They're often forced to sell to cover their losses.
Right.
That's a liquidation. And a lot of people got caught in that way.
Oh, $1 billion. That's a lot of people scrambling to sell. So is this the start of like a full-blown Bitcoin crash? Everyone's holding their breath right now, waiting to see what happens next.
Yeah, it's a critical moment for sure. Analysts are keeping a close eye on a couple of key support levels.
Okay.
If the price drops below 92,000 and especially below 90,000, it could signal like further downward movement. Some are predicting a dip to 80,000 or even 85,000 if those levels don't hold.
Okay. I'm getting a little nervous just thinking about it.
Yeah.
But I know there's still a lot of people who are incredibly bullish on Bitcoin in the long run. What makes them so optimistic even with all of this volatility?
You're right. There are strong reasons for optimism. One of the biggest factors is the growing institutional adoption of Bitcoin.
Right.
We're seeing major players like MicroStrategy, they're a publicly traded business intelligence company, even insurance giant, Mass Mutual, investing significant sums in Bitcoin.
Wow.
And, these moves add legitimacy to Bitcoin as an asset class and suggest growing belief in its long-term potential.
So it's not just like individuals buying Bitcoin anymore. It's
Yeah.
becoming more like mainstream.
Absolutely.
And I remember reading somewhere that a strong economy can actually be good for Bitcoin.
Yes.
Like despite this recent dip.
Yeah.
Something about a risk-on mentality.
Exactly. Matt Mechna, a crypto expert at 21 Shares, put it well when he said, a strong economy can actually fuel a risk-on mentality among investors. Basically, when the economy is humming along, investors are more likely to put money into higher risk assets with potentially higher rewards. And Bitcoin definitely fits that bill.
So this recent price drop might just be like a temporary blip.
Mm-hmm.
Could we actually see Bitcoin blow past its all-time high of $108,000?
It's definitely within the realm of possibility. The forces driving Bitcoin's adoption and integration into the financial system are powerful. And a risk-on environment could definitely push it to new heights. But there's another wild card we can't ignore.
You're talking about the presidential inauguration, right? It feels like everyone's forgotten about that with all the drama around Bitcoin and the Fed.
Easy to overlook, but political transitions often inject a dose of uncertainty into the markets.
Right.
And uncertainty usually means volatility.
So we've got the Fed keeping everyone guessing about interest rates.
Right.
And now a presidential inauguration thrown into the mix. It seems like Bitcoin holders are in for a wild ride. But I'm still a bit fuzzy on how exactly a new president could impact Bitcoin. Can you walk me through that?
Sure, it all boils down to policy.
Yeah.
Different administrations have different stances on economic policies, financial regulation, and even things like how cryptocurrencies are taxed.
Right.
All of these factors can directly or indirectly influence how Bitcoin performs.
Okay, that makes sense. So we've got short-term uncertainty with the inauguration, on top of the longer-term question marks surrounding the Fed's next moves. It sounds like Bitcoin is stuck between a rock and a hard place.
Yeah, there's definitely potential for some choppy waters ahead.
Mm-hmm.
But remember, seasoned investors often see these dips as opportunities to buy Bitcoin at a lower price.
Right.
They're playing the long game.
That's an interesting perspective. It seems like there are so many different ways to look at this. For those of us who aren't, like, glued to the charts every minute, what's the main takeaway from all of this? What's the big picture?
I think the key takeaway is that Bitcoin is becoming increasingly intertwined with traditional financial markets.
Okay.
It's not this isolated niche asset anymore.
Right.
It's reacting to the same forces that drive the stock market, the bond market, and global currencies.
So does that make Bitcoin riskier or less risky?
That's the million-dollar question, and there's no easy answer.
Mm-hmm.
On the one hand, this integration could lead to more stability for Bitcoin over time.
Okay.
As more institutional investors come on board, we might see fewer of those wild price swings.
Right.
But on the flip side,
That's the flip side.
well, it also means Bitcoin is now exposed to the same macroeconomic risks that affect those traditional markets.
Okay.
A global recession, for example, would likely impact Bitcoin just as it would impact the stock market.
So understanding Bitcoin now means understanding the entire global financial system.
Pretty much, yeah.
That's a bit daunting.
It does add another layer of complexity,
Yeah.
but it also makes things more interesting. And it raises some intriguing questions.
Okay.
We've talked about how a strong economy can be good for Bitcoin
Yeah.
because it fuels the risk-on mentality.
Right.
But what happens if the economy takes a downturn?
Right.
Does Bitcoin sink with the ship?
Now that you mention it, that's something I've been wondering about. Wouldn't a recession send people running for safer assets?
That's what some people believe. They see Bitcoin as just another risky asset that will suffer when the economy weakens. But there's another school of thought.
What's that?
Some view Bitcoin as a hedge against inflation,
Okay.
a safe haven asset similar to gold.
Mm-hmm.
Their thinking goes like this. If the economy weakens and governments print more money to stimulate growth,
Yeah.
that could lead to inflation. And in that scenario, Bitcoin's limited supply might make it a more attractive option.
So is Bitcoin a risky asset that thrives in a booming economy, or is it a safe haven that shines when things get tough? Seems like we have two competing narratives here.
Exactly. And honestly, we don't have a definitive answer yet.
Yep.
Bitcoin is still relatively young,
Okay.
and we're still learning how it behaves in different economic environments.
It sounds like we're in uncharted territory with Bitcoin, you know?
Yeah.
It's fascinating how its role seems to be evolving, and we're still trying to figure out way it fits into the larger financial landscape.
It's definitely a dynamic situation. That's what makes it so captivating. There's this constant push and pull between those who see Bitcoin as a speculative asset driven by, market sentiment and those who view it as a store of value, a hedge against inflation, or even a potential future currency.
I have to admit, the more we dig into this, the more questions I have. It feels like Bitcoin is at a crossroads.
Yeah, you hit the nail on the head. It's this intersection of technology, finance, and even geopolitics. We're seeing governments around the world grappling with how to regulate Bitcoin, central banks exploring their own digital currencies, and institutional investors cautiously dipping their toes into the crypto waters. It's a truly transformative period.
So for someone trying to make sense of all this, what are the key takeaways? What should we be paying attention to as this story unfolds?
I'd say keep an eye on three main areas. First, watch how the Fed's policies on interest rates and inflation play out. Their decisions will likely have a significant impact on all markets, including Bitcoin.
Okay. And what's the second area to watch?
Pay attention to the ongoing institutional adoption of Bitcoin. As more companies, hedge funds, and even pension funds invest in Bitcoin, it will continue to gain legitimacy and potentially drive further price appreciation.
That makes sense. And what about the third area?
The third thing to watch is how governments around the world approach regulation. Will they embrace Bitcoin and foster innovation, or will they try to, control it? The regulatory landscape will play a huge role in shaping Bitcoin's future.
This has been an incredible deep dive. We've covered everything from surprising jobs reports to the inner workings of the Federal Reserve, the growing influence of institutional investors, and even the potential impact of government regulation. It's amazing how it all ties together.
Yeah, it really highlights how interconnected our global financial system is and how Bitcoin is becoming an increasingly important part of that system.
So, one final thought for our listeners. We've explored how a strong economy might benefit Bitcoin due to a risk-on sentiment. But what happens if the economy takes a downturn? Does Bitcoin prove itself as a safe haven asset like gold? Or does it get swept away in the current? That's something to ponder as we continue to watch this fascinating story unfold.